Good evening, friends. I know some of you must be missing me because I was not there last week. I was traveling. I did one webinar with our PMS customers yesterday, and I'm with in front of you with very interesting some data points. I've compiled some data points for this webinar. I just wanted to give you some insights about what's happening in the market. But before I present some data, let me put a small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. Past performance is no indicator of any returns, and investment in securities market are subject to market risk. Now, what I did actually, I look at how the market cap has changed and who basically driving the market cap from 2014 to 2024, the last one decade. The idea was to understand what happened in the market cap, this one. Now, if you look at it, in 2014, IT software was the most valuable sector. Can you see? At 14%, and the banks were little low below that, 12% only. You fast forward to 2024 and you realize the IT software has contribution to the overall market cap has come down to 11% only. But banks' market share has gone up in the total market cap to 15%, from 12 to 15, much higher than what IT software as a sector were commanding in 2014. Now, I have highlighted certain data in a green font. What does it mean? It clearly shows how market cap was higher as compared to the 2014 data. Whether it's a banks, whether it's a refineries, mainly driven by the Reliance and so forth. And of course, the PSU stocks did well. So PSU refinery also contributed. And finance. Okay. And there is also a trend that I've observed that those sectors have seen market cap increasing as compared to 2014 are those sectors whose profit has also expanded. For example, banks' market cap contribution increased from 12 to 15, and so is the case with profit contribution from 17 to 24. As you can see this. Am I right? 17 to 25. So is the case with refineries from 9 to 14. And so is the case with finance from 7 to 9, which clearly suggests that there is a strong correlation between growth in the profit and growth in the market cap. Now, why am I sharing this data in front of you? Look at those sectors who are contributing more towards the growth in the index net profit. And if that is so, market cap will follow that trend. Very simple. And where it is not so, for example, the IT software, 12% of the total this one, but there is something wrong with my, looks like, let me just see. Okay, 12% was there, it came down to 8%, and so is the case with its contribution to the overall market came down from 14% to 11%. And that data you can keep seeing in others also, like for the pharmaceutical, 4% to 3%, and then the market contribution came down from 6% to 5%. So there is a clear-cut trend that's what's happening. There's one more thing which I've observed. If you look at the top three sectors in terms of profit, that is banks, IT software and refineries, they almost account for 50% of the profit of India Inc. 25 plus 14 makes 25 plus 8 makes 33, and 33 plus 14 makes 47%. So three sectors accounts for almost half of the India Inc. profit. So why am I saying so? Remember this. If India Inc. has to grow, net profit has to grow, these three sectors has to grow. That is banks, IT software, and the refinery. If that grow, there is a high probability that India's market cap can also grow, because ultimately market is a function of net profit. And that's why it's very, very critical for you to note these numbers. So that's one. Second thing, which I was reading one article in one of the foreign publications, which says that if you look at the US market, it has been driven by few stocks. Previously it was called Magnificent Seven, and now it has been driven by few stocks, and Nvidia is one of the leading from the front. Is this something similar happening in Indian market? The answer is no. Why? Because what I did, I looked at 2022 top 10 contribution to the overall market cap, top 23 and top 20, and in 2024. And if you look at that, in fact, on the contrary, the India's rally has been more broad-based. Why? Because top 50 companies in 2022 were accounting 57% of total market cap. In 2024, it accounts only 51%. In other words, this rally has been more broad-based. Now, what does this mean? If the rally is more narrow, it does cause for a concern. Why? That means if something has to go wrong, the market will collapse there. In India, the market, when the rally is more broader, it gives some amount of comfort level. Now, the other way to look at it is that, and this we used to say once upon a time, those companies were there, now they are no longer there. But the likes of Chagan Magan keeps increasing. It does create a problem. That means some of the junk stocks have also started participating in the rally, which is not a very healthy sign. So whichever way you look at it, but unlike US market, Indian market is having a broad-based rally. There are pockets of froth in the market, which we have been keep saying called mid and small cap, which continues to be there. And this data does gives an impression that there are some what we call, it's not the large cap, but some of the mid and small caps are contributing more towards the market, and it could be a cause of concern to some extent. Which again tells us that if the market has to really do well, it is the top 50 company that has to do really well to sustain this kind of a rally. Now, our sense is that some of the likes of junk stocks that started doing very well does create some amount of bubble in the overall market, and if they are not able to sustain, and this is one more thing which I was talking to someone and he was making me understand. Today, no promoters wants to left behind in terms of the market cap. So what are they doing? There is a possibility, I'm just saying there's a possibility. Because the market momentum is so strong, somewhere you have a desire to show better profits. Otherwise, your market cap will not improve. And that could be another danger that, in zeal to participate in the rally, some companies are or maybe reporting numbers higher than what actual numbers may be. Now, these are all guesswork. There is no data or no scientific proof that I have, but that's possible. We have seen that in the past where, promoters also wanted to participate in the rally, have inflated the numbers to see that they can attract the investors' attention. Whether that's happening this time or not, but someone was indicating to that extent. How far that number, that observation is right, wrong, only time will tell. If you look at the trend in the market post-election, the market has moved substantially up. The beauty is that there is a fear of budget, there is a fear of tweak in the capital gain tax, there is a fear of F&O market could see some amount of a restriction. The market is ignoring all this. The US Fed or RBI not doing any rate cut doesn't seem to be bothering the market. In fact, now the news is from the US is that only one rate cut in 2024. In the beginning of 2024, it was near about 6 to 1. It has come down. Yet market it doesn't seem to be bothered about. Valuations are very, very rich, whether you look at market cap to GDP, whether you look at price to earning, we are in a rich valuations. But market doesn't seem to be bothered about it. One factor could be that there is a strong collection on the tax front. We got direct tax collection, advanced tax for 15 June, and it has shown a very robust growth. Economic indicators are continue to remain very, very strong, and market seems to be taking comfort from that. Whether we like it or not, but central banks across the world have started becoming more and more unsynchronized, what we call behavior. Some central banks are started reducing the rate of interest. Some central banks decided to take a status quo. They are not doing that. Like for example, yesterday UK did not do it, Fed did not do it, RBI did not do it, but ECB did it, Brazil did it, Sweden did it, Mexico did it, Canada did it. So you can see there seems to be some disconnect among the central banks. Copper, which was going up and which was giving a hope that China will show some strength in its economic activity, doesn't seem to be. Why? Copper price have gone down by 12% in 1 month. Purely because the real estate in the Chinese continues to remain a problematic area. Some numbers coming out from the US also does indicate some softness in the US economy, and we need to wait and watch. Southwest monsoon till now is in deficit. Is this a cause of concern? The answer is no. Why? Because both IMD as well as the SkyMed predicted that monsoon will be normal or above normal. So even though it's a deficit right now, it will make up in the coming what we call months, because still the season is still September, so we don't have to worry too much at this point of time. Having said that, June earnings are likely to remain little subdued. Why is going to like to little subdued? Because of heat waves, lot of productivity got impacted, road construction was not at its best, and so on and so forth. And election also did take away the momentum from the economy, because some labor class which went for the election did not return in time. And if you happen to listen to some of the interviews given by the management, they alluded to the fact that they was a little subdued. In fact, I was in Lucknow and I was talking to the general manager at Taj. I was staying in Taj, Lucknow, and he was making me understand that the numbers are not so great for the Lucknow property. Why? Because of election. So people traveled little less because of election, business activity was little less, decision making was little less, and hence there is a possibility that June earnings may not be as strong as expected. Sector rotation has started happening in the market. Whether that continue going forward or not, will come to know in next 1 month or so. But there seems to be some profit booking happening, well, especially on those sectors and those companies which run up substantially high. Laggards seems to be making a comeback. Whether they sustain that comeback or not, again we'll come to know. And today the sentiment is so bullish that if you talk about the corrections, no one seems to be interested in that. So as and when it happens. But right now, the moment you talk about correction, people say, "Aadmi pagal ho gaya." So that's the kind of bullishness. Now you look at which is the best performing sector in last 1 week. Bank Nifty and Nifty Finance. If you go back 2023, that was not the case. Even if you look at YTD, which I'll present the number in next slide, they are not among the best, but they did extremely well. IT making a sum to be comeback. Okay, small cap up by 1.76, marginally up 0.3, 0.2 in last 1 week. If I made the data last, what we call yesterday, the picture was looking different. But today, when I look at the data, the picture looks a little different. Am I right? The mid cap is in red, while the small cap is in green. And you look at most of the sectors like PSU Bank, negative 1.1%. If you look at the auto, which has done extremely well, down by 2.5%. So there is seems to be some amount of a profit booking seems to be happening in the counters. Whether it gets sustained and get carried forward to the next week and week thereafter, we need to wait and watch. Again, you look at IT and FMCG are in the green, and Bank Nifty and Nifty Finance continues to underperform the Bank Nifty to the Nifty in this case. Am I right? So both are underperforming in the market. FIs have turned positive and purely mainly post-election result. If you look at post-election result till 10th Jan, FIs have pumped in near about 24,000 crore. But since they sold in the previous period, the what we call the net is 12,000 crore. So I think that has happened. The 12,000 crore has been invested by FI in June 2024. So mota FIs have turned positive. Sector rotation have started happening in the market, and market doesn't seem to be like it is a Teflon effect. No negative news are going to is impacting market at this point of time. We don't know when and what could cause some amount of concerns for the market, but the fact of the life is that market right now seems to be in a very positive mood, and sometimes the seeds of what will corrections are sowed at the time of optimism, not at the time of pessimism. My only advice to all of us, our view on the mid and small cap continue to remain a little cautious. In our PMS, we continue to remain heavily invested in large cap, and we have done so. We did lock in some profit in our one of the PSU bank that we were holding. Some profit. We did lock in some profit in our defense stocks, and we have gone into sectors which we believe could be the leader of the tomorrow, and we started building up a position on those sectors. With this, I would love to have questions from you, and then I'll try to answer. G1 George, hi Sunil, I'm a serious believer of MarketsMojo and have convinced multiple family members and my friends to be part of the MarketsMojo family in one way or another. Thanks a lot, sir, for your nice words to your family members. We are very grateful to you. I understand that USP of market is all products. It's AI assisted intelligence IP. My question is, what are the limitations that we have in the current IP? Second question, for some or other reason, I feel there is a lot of human intervention expecting there might be a correction. Is it true? Does the IP suggest that there could be correction? This question need not be addressed in this seminar. If it is irrelevant to the topic of discussion, we can discuss on my email. No, sir. Why not? We can discuss this very much in this open forum, because the question that you are having, many other investors may also have in their mind. So might as well address that. So is the MarketsMojo USP is IP? Answer is yes. My question, what are the limitations that we have in the current IP? So remember, sir, no IP we can say it's 100% perfect. As the new data keeps coming in, you keep refining your IP with the new data. It's like your mobile phone. Am I right? You will keep seeing upgrade every now and then, whether it's in terms of processor, in terms of quality of camera, in terms of quality of reception, in terms of quality of 4G and 5G and so on and so forth. Same way, there will always be limitations. So remember, we are not saying that our IP is foolproof, 100% correct. We have seen some of the companies which we have recommended sell, the script has moved up. The same way, some of the company buy have not live up to that expectation also. So there are limitations. So there is nothing called this. But the beauty is that at MarketsMojo, we keep improving that what we call IP. And remember, at certain point, to even do the marginal improvement takes away a lot of time and energy. It's like, in exam, it's easy to score 95 out of 100. But 96 becomes a little difficult. The journey from 96 to 97 becomes a little difficult. 97 to 98 becomes a little difficult, and something similar will also happen with the IP. Second question, for some other reason, I feel there is a lot of human interest expecting there might be a correction. Is it true? I did not get your question right, but are you saying that is our IP suggesting that it could be corrections, and due to that, are we doing some intervention, human intervention? There is some human intervention, I must tell you that. This is not more on the MarketsMojo side, but there is definitely on the PMS side, where we do look at the companies where we believe, where we need to lock in profits, where we need to believe that this company deserves to be the part of the portfolio. Of course, it has to be part of our IPL, so on and so forth. But if there is some amount of human intervention there in the PMS and not so much in the MarketsMojo side. Is the IP suggesting corrections? Answer is no at this point of time. But do we believe corrections can happen? Human, that's my personal opinion. Answer is very much yes. So I hope that answers your question. If I misunderstood your question or I missed out any part in which you need further clarity, feel free to again put your question, and I'll request Amir to again take up your question. But thanks for asking this question. Shyam Desari, so I would like to know your outlook on the stocks in the finance investment, sale, trading, brokerage, and a diagnostic center for the next few quarters and year forward. So, Shyam sir, my understanding is that finance, so let me tell you one more thing. NBFC space, we started increasing our exposure in our PMS. It may not be sale, trading, or brokerage firm, but in NBFC space, yes, we have started increasing our exposure in our PMS. Diagnostic sector, again, the outlook looks little promising. Why? Because the price war seems to be over and people have started asking for better prices. Number one. Number two, people have become more health conscious. And due to that, is someone who used to do once in 3 years the diagnostic have started doing at least once in 2 years or maybe once in 1 year. So I think that's further increased the. And one more thing which is happening in the diagnostic sector, that there is a consolidation happening that should further give a pricing power. So our view on, this is my personal view, so don't get confused with our IP. My personal view seems to be that diagnostic as a sector should do reasonably well in the years to come. So Rakesh Gupta is saying, we gather from media reports that Mr. Amit Goia has been inducted as the group CEO. Kindly elaborate. So you got it perfectly right. Yes, we have issued the press release and all the media houses, prominent media houses in the country did carry this news that Mr. Amit Goia has joined as a group CEO in the company. In fact, he'll be in front of you very soon. He joined us on Wednesday. Today is Friday, so 2 दिन ही हुआ है उसका, and he'll be in front of you and he will elaborate more on that. But yes, you read it right. Mr. Goia has joined us as a group CEO. He will be help us to drive the next leg of growth. For the growth, he comes with a lot of rich experience, and he has a lot of rich experience in the digital space, and that will really help us to make our product little more better in terms of UI UX. He will make up a new strategy how we can enrich the experience of our customers in terms of more data in a more meaningful manner, so that you can consume data in a much simplified manner, and so on and so forth. So he will be in front of you very soon, maybe next week or 1 week after that, and then maybe you can have any questions, maybe you can ask him. Dr. Garg, Namaste Sunilji, hope you are well. Wondering what is the best way to invest in gold, bearing in mind that we are OCI residing in UK. Thanks. I don't know whether Dr. Garg Saab, you can invest in the RBI which comes out with that gold bond, sovereign gold bond. If you can invest in that, I think you should invest the best way there, because I don't know whether the OCIs are allowed to invest or not. I have little idea on that. Or maybe if that's not, maybe the gold Bs are available, maybe you can invest through that. Even if that is not what we call possible, maybe see, gold is a global commodity. So I'm so sure Even in the UK, you would have some kind of a ETF on the gold. Maybe you can buy that because ultimately gold is an international commodity. So why do you need to buy only in India? You can buy gold in the UK also. And worst case, buy the physical gold bar or the gold bricks. And that's the best way you can buy, sir, Dr. Saab. And give my regards to your wife, I'm missing her interaction. I don't think you could join in our PMS because of the compliance related issue, because of your bank little seems to be different, but give my regards to her. Balaji, hello Sunil, both my Infinity Soul and Power Play PMS have beaten the Sensex, but my smaller margin too, thanks for that. But for the data with the MMT, why you seems to only in beating the index? Especially in case of PMS, you have full discretion to deploy funds as per the market situation, right? Did your team invest my PMS in fertilizer stocks which had a good run in the past days? As everyone in the market was speaking of good monsoon, government take GST and fertilizer. Thanks to advice for your strategy. So, Balaji sir, yes, I'm happy that we have outperformed your PMS. Marginally, I know what you're trying to refer to is that we should aim to outperform significantly. But you need to understand, sir, we just started PMS, not completed even 1 year as I speak to you. So we need to have some amount of patience, and we are very confident that we should be able to significantly outperform the benchmark. That's what our India way would be. Otherwise, there is no fun in life. Am I right? Did we invest in fertilizer stocks? We did started. We invested in some of the agrochemical stock. I don't know whether we invested in your portfolio or not. So our view on the agrochemical and fertilizer we have turned little bullish, and we are building a position in a very gradual manner. I think some report coming in today that GST on fertilizer may not be that game changer. So I don't think that's the reason why. And today we saw some of the fertilizer companies also taken a beating because on that report coming out, it may not be very so much favorable. What is happening? Why our view on the agrochemical and fertilizer has become a little positive purely because Government of India increased MSP on many of the kharif crops. Number one. Number two, monsoon is expected to be good, and that could give further fillip to the demand for agrochemical and fertilizer. And number three, I think some of the fertilizer agrochemical companies are looking at export as a market to do that. So that will drive the top line as well as the bottom line. So GST, I don't think is a game changer, but the three factors that I mentioned seems to be like a good choice to increase allocation to the fertilizer and the agrochemical. But we are very cautious. We don't want to buy price company at any price. If you remember, some of you have asked us about the defense companies, and we did mention that we will not go out and buy at any price. We don't believe in the growth at any price. Okay, we do believe growth at reasonable price, and that's where, as and when we get the comfort level, we'll increase the exposure. So sometimes the view on the sector may be bullish, but not necessarily that at that price you should get into that. Maybe you should wait for the right price to get in and then ride the rally. So that's what exactly we are doing with the fertilizer and agrochemicals. Kuradets saying, sir, it gives me immense pleasure to attend your webinar. We are kindly requested your opinion on sugar and chemical sector in near future. So pleasure is mine actually. When I come in front of you, I also get energy. I also learn a lot of things from your questions, and that really makes me really happy. And it will also get a lot of knowledge through this interaction. Now, opinion on sugar, I think there's one thing which sugar industry has been expecting for quite some time, to increase in the MSP, which has not happened. And there is a possibility that we might see that happening, number one. Number two, there is a restriction on how much sugar can be exported, because government during election time did not want sugar price to move up, because it could be counterproductive for the incumbent government. And there was rain was also a little deficit last year, and hence due to that the output was little less. We believe that restriction on export of sugar may get eased, and that should further benefit sugar companies. And then again, ethanol blending, which is another reason, we believe even that can go away. So that makes us believe that sugar as a sector should do reasonably well going forward, and so is the case with chemical. I think chemical somewhere, it's all depending on how China behaves. If China economy again goes into slow motion, then again, or slow down, then it's a area of challenge. But some green shoots are visible in the chemical sector, but it's yet not confirmed that it's going to sustain. So my advice would be more of a wait and watch, more of a stock specific. But sugar as a sector looks a little promising at this point of time because tide seems to be turning in their favor. Sam Sundar, is it the party over defense stocks? The answer is no, sir. Time for at least sharp correction? Maybe yes. Valuation gone up despite to growth? Yes. Mutual fund launching defense funds? If not, what are the reasons to believe that story is still intact? So I think the reason for story is intact because India has an ambitious plan to export. We all know that geopolitical situation is becoming more and more demanding for each and every country. And hence, the defense budget is going to keep increasing, whether we like it or not. And that's very good thing for the defense companies. So yes, valuations have gone disproportionate in many of the companies. And that's what I was exactly saying, Sam Sundar, that we are also, so in one defense company that we are holding, we locked in profits. We want to buy some of the defense companies. I must tell you that. It's in a strong radar in our PMS also. But we'll get into those companies at the right price. That's what we believe is the right price. And then we'll ride the next leg of rally in the defense companies. So fundamentally, this sector should do extremely well. It's just that correction needs some healthy corrections to take it to the next level of growth. Sunil Damania is saying, can I invest now? See, sir, if you don't need this funds for next 3 to 5 years, my answer is please go ahead and invest. If you need these funds in next 2 years, whether market goes up or goes down, don't invest because equity by nature is a non-linear. And when you need the funds, if the market sentiment is down, you'll be forced to exit at the wrong time. So, I must tell you that Dharmendra ji, we are fully invested. It's not that we have 100% invested, but more or less we've reduced our cash component in PMS, and we have invested to great extent. We did some active profit booking also because of valuation concerns, and that money has been redeployed in some of the new sectors which we believe are going to do well. So my suggestion would be please go ahead, but only very, very careful of what sectors you take exposure, what companies you take exposure. If possible, stay away from the mid and small cap, if possible. If you still want to go ahead and invest in mid and small cap, then be careful what kind of company you are getting into. I don't want you to invest at the top of the price and then, keep waiting for outperformance for many, many years and sometimes decades also. I can give you some of the companies like PC Jeweler and Wakrangi and so on and so forth. Market has touched all-time high. These companies are still struggling to go back to their 10 years high, what they did 5 years or 10 years high. So that could happen. So be careful of what you get into. My name is Rahul. I want to add funds to my PM. Do I need time to additional investment or can I be done when funds are available? Don't try to time the additional investment. We will do that for you because we are doing in PMS. And please do it as and when you have the funds. As I told you, we have reduced our cash exposure. We have invested in liquid funds. We have sold some of the liquid funds and invested in the equity and some of the sectors which we believe are likely to do well. So if you have the funds, please add investment in PMS. Don't wait for the time to try to time the market. Duranganawad sir is saying, sorry if I pronounce it wrong, this unabated northward Sensex may lead to the formation of a bubble zone due to overstretch value, sir, provided there is a healthy correction of market. We do believe there is a need for healthy correction, but somehow that healthy correction is not coming. Are we in the bubble zone? Overall, the answer is no. But there are pockets of bubble. The answer is yes. So what we have done as a strategy in our PMS, the sectors where we do believe that valuations are very, very reasonable, growth prospects are really good, we have started putting money and building a position there. So that's exactly. So if as long as you can avoid those the pockets of bubble, you should be fine. And look at for the sectors which I was saying, some sector rotation seems to be started happening. And if you happen to be that sector which was a laggard and now started making some amount of comeback, I think you should be fine in that case. So don't try to get too much. See, valuations are rich. As I mentioned, price to earning is rich. Market core GDP is very, very rich. But there are certain pockets which we still believe there is a valuation is good. And we basically park those funds in that. And please be careful with the mid and small cap. I think the more problem seems to be more severe in some of the mid and small cap as compared to large cap. And in our PMS, almost 90% is in large cap within the equity allocations. So, and we believe that's where one should take a shelter in. Ramu sir is saying, is it the right time to invest in mutual fund, mid cap, small cap, and SIP, SPI, or expect major correction anytime shortly? Can we go for Mojo ranking of? You should go with the Mojo ranking of mutual fund without any doubt. Do I expect major corrections? The answer is no. Sorry, I never mentioned that I'm expecting major correction in the market. I need healthy correction. Why? Because that healthy correction will make the next leg of rally more sustainable. Should you do SIP through mid and small cap? Please do that, because anyway you are doing SIP. So whatever the law of average will kick in, and that's the right way to do that, provided you are doing that SIP for minimum 3 to 5 years. If that is so, please go ahead and do that. Don't, and even if you are doing SIP, don't stop it with a mid and small cap, because the law of average will come into picture. Popat Bhai Chaudhary is saying, sir, now what about small cap stop contribution is more in recent market, please focus on above. Sir, I don't know what question is this, sir. What about small cap stop? Matlab, contribution is so more in recent market, please focus on above. I will request, sir, if you can rephrase your question, that will help me to understand what exactly you want to know from me. Jagdishwar sir, during my main appeal, it was understood that FI has made net selling. What is the situation in June so far? Please comment. So, sir, as I mentioned in my PPT, post-election, they have started reinvesting in the market, Indian market. So, in the month of June, month to that, they are about 12,000 crore positive in the market. One reason could be that China, as we all know, is little going soft, and the excitement about the China investment seems to have abated to some extent. And that's why I thought right now they've invested. Do we expect substantial inflow from FIs? Even going forward, the answer is no, purely because of they did extremely well. They invested very substantial amount last financial year, and we don't have a history where they repeat the next financial year the similar kind of inflow. So we do believe that the inflow would be little muted from the FPI. And second thing, valuations are rich, so I'm not very sure if we can expect sustained inflow from FI in the coming months. Is there a time ripe to shift to mid and small cap? Rao sir, we do believe that pockets within the mid and small cap which are very close to bubble zone. And unless you get into a right kind of a company within the mid and small cap, you should be fine. in our PMS, we are playing little cautious, we are playing little safe, and we have taken a lot of exposure to large caps only. Anil sir is saying, please advise the future of private banks, auto and auto ancillary regards. So slowly and steadily, we believe have become a little more bullish on the private sector banks. We have started adding exposure to the private sector banks now in our PMS. Auto, one of our largest holding in PMS is auto stock, and our bullishness remains there. In auto ancillary also, some of the pockets does gives a hope that they should do well. But in auto and auto ancillary, my request would be more stock specific, because you must have read about that some of the auto companies have started offering discounts now to clear the inventory. The sales seems to have gone little soft. So that could impact the numbers. And if you remember, I did one future trend analysis and I did mention about one of the best way to pick up the auto companies are those companies which are gaining market share in their sub-segment. So if you wish to increase the exposure, please go to that. In fact, one of the holding, that topmost holding that we have in our PMS, that company is increasing market share in the segment it's operating. And that's why we love that company. And it has made very good money for our PMS investors in that. So we are a little selective in terms of auto and auto ancillary. And private sector seems to be making a strong comeback. I think it should reasonably do well in 6 to 12 months time frame. Nagarjuna and Ankit is saying, dear Sunil sir, last week fertilizer stocks performed touch 52-week high based on news flow. Is it correct time to add fertilizer stocks to our portfolio, and also some governments entering for next 5 years? Can we add PSA stock, sector stock? Please advise. I did mention about the fertilizer and agrochemical stock that monsoon is going seems to be good. MSP increasing for Kharif crop is a positive. And number 3, many of these companies also wants to expand beyond India. So that's a good news. PSU stocks, yes, you can do that. The story continues. Only thing, be mindful of the valuation. Some of the PSU stocks are commanding a very rich valuation. And for some reason, if Government of India decides to dilute their stake in those companies, there could be a pressure. So we are more selective in PSU pack rather than, buying left, right and center. So that's my advice would be to you. How many rupees required for PMS? Rajesh Sampat sir, the SEBI guideline says that any customer who wants to join PMS should have minimum 50 lakhs. So if you have minimum 50 lakhs, you are welcome to join PMS. If you don't have 50 lakhs, maybe then you need to create that kind of a wealth and then you can join PMS. Nimesh is saying, love to hear your voice after many days. My question, Harry Dent predicted market fall of 70 to 80%, worse than 2000 according to him. He prediction took less correctly in the past. So please answer, is our lot of savings are in equity as of now and lot of MMOs what I feel. Please answer without fail, Sarji. So Nimesh sir, I don't know whether this Harry Dent has predicted 70-80%. I don't think. See, we don't expect market to fall by 70 to 80%. And a lot of due respect to this gentleman, please ignore this. I distinctly recollect one article published in one of the leading newspaper, and one of our investor sent us the copy of that article written by a very prominent journalist, suggesting a gloom and doom kind of a scenario for the Indian equity market. This is not very far, 2 साल पहले की बात है. And at that point of time, and this investor that I'm referring to normally attends our webinar, so he must be there and attending this webinar, and he can recollect what I'm referring to. And he sent us the clipping of that, saying that market तो बहुत गिरने वाला है. Please don't listen to this kind of an advice. if market, see, during COVID time also, where everything got shut down, market correct by 30%. Now to 70 to 80% fall, something terribly has to go wrong in the world economy. I don't know what could be that. Or if something terribly has to go wrong and which can crash the market by 70%, I don't know whether we'll be alive also or not. So, paisa ka fayda kya? Am I right? So don't listen to this kind of fear psychosis. We do expect market to have healthy corrections, but we are not. And in fact, that healthy correction will be so good that we'll see the next leg of rally very substantial. So, I don't want to go into the debate of, see what happened in 2008. The market rose very substantially. Even if you look at the CAGR of last 10 years, and in fact in one of my presentations I also made, this is one of the slowest growth in the market. Last 10 years ka data dekh lo, there is nothing called that market have risen too fast, then hence it's called for a too sharp a fall. That's not been the case. If you look at the YTD and if you look at this graph, okay, YTD, what is the market has been? The Nifty is up by 8.1%, Sensex is up by only 6.9%. Have we seen, so there is nothing called bubble that has been get formed that we need to be worried about 78. In 2008 there was a bubble because if you look at the rally was very quick and too sharp. Nothing that of sort of has happened. So don't listen, don't कुछ market में निकल जाने का. Let me tell you my own portfolio. If I was expecting 70-80%, मैं तो सब कुछ बेच के निकल गया होता. I have not done that. All my investments are in equity. And I expect I will make more money in next 5 years from equity only than what I made in last 30 years. So do not listen to that, irrespective of the track record of the gentleman. I have not come across that prediction, but I can tell you with a lot of confidence, India would be the shining star in the global world economy. And so is the case with Indian equity market. So any healthy corrections should be opportunity to add more, not to take out money. P.S. Mukherjee sir, do you still think market will go down to the pre-election level? Yes. P.S. money is idling. I feel suggest taken investments is taken in the wrong time. Market moving without support of foreign investment. Your comment. So sir, as I was saying, we have taken some cash call, but we have deployed all the funds post-election in the equity. So that money that was remaining, because we're a little cautious, let me be very honest with you. And you are right. We did go wrong in that to that extent that, market did move up than what we were expecting. But that happens in any fund manager investment journey. It's a part and parcel of the investment journey. Market is moving without support of foreign investment. Yes, that's true, because retail investors flow is so strong that even FIs are selling in the market doesn't seem to be bothering the market sentiment. So you are right. And let me tell you, in our PMS, some portion we have invested in liquid funds, but most of the investment, to what it was there in the first week of June and what it is now, we reinvested substantial amount in the equity market. Only thing what we have done is that we have chosen different sectors based on our IP to reinvest that proceeds which we sold and did the profit booking. So our sector allocation has gone drastic change. What I will do, Mukherjee sir, since you have raised this point, when I make this presentation in the first week of July, on the first Thursday of July, I'll showcase what was our assets allocation at the end of the May sector allocations and what is at the end of the June. And you will see a stark contrast there happening there. So I'll do that so that you will get an idea what I'm referring to. Amrita saying, post-budget, if you have to rank top 5 sectors, see, our story remains the same. The theme remains the same. defense, railway, capital goods, pharma, maybe the FMCG, private sector banks. These are sectors which we believe should do well. The only thing you have to be a little more selective in terms of what stocks you need to do that. Am I right? Otherwise, this theme remains, and I think there is nothing, no fundamental change in the view of these sectors. They should do well. Only thing, be careful what you get into. Ayyappan sir, can you give some stock suggestion? I want to invest up to 10 lakhs. Sir, Ayyappan sir, I have moved to the PMA side of the business, and hence I will not be able to give you any stock specific recommendation. But since you wish to invest 10 lakhs, we have a very beautiful product available on MarketsMojo called Model Portfolio. Based on your risk appetite, whether it's an aggressive, conservative or moderate, you select your risk profile, you put 10 lakhs as an investment amount, and it will generate a portfolio for you. And please follow that portfolio in a disciplined manner, and I think you should be fine. Use your view on downside Nifty 19,000 intact at this point of time, yes. But I must tell you that the way market is showing sort of resilience, sometimes even I doubt whether that will happen or not. But as I speak to you, I still believe logically it should touch 19,000 Nifty 50. But whether it will happen or not, the probability is getting reduced day by day. Why? Because market is showing a lot of resilience. Balaji saying, sir, 50 lakhs limit of payments including mutual fund or only stocks? Sir, we always only, so you can give mutual fund and stocks also. As a this one 50 lakhs, we will sell the mutual fund and even of the stocks which are not part of master list, and we reinvest. So if you can give mutual fund as well as stocks to us, we can see, because what SEBI says that when we start your portfolio, the investment amount has to be 50 lakhs. So how can you fund that 50 lakhs? Either you can give cash, you can give all stocks, you can give all mutual funds, you can give combination of stocks and mutual fund. We'll liquidate that amount and reinvest that as based on our IP. Do we have more questions? Okay. Devendra sir is saying that SIP flows 20,000 crore every month, and whatever the market falls, we observe strong buying, indicating that our decision to exit from small and mid cap stocks in March was incorrect. We lost big profit because many stocks have given big return. So Devendra sir, what we do some kind of an exercise in terms trying to understand the stock we were holding in terms of as of March in mid and small cap and moving to large cap. Due to that, have we underperformed or outperformed? So despite we moving out of Devendra sir in our PMS from mid and small cap and moving to large cap, we significantly outperformed the benchmark. So in a way, we reduced the risk in the portfolio, and yet we generated alpha for the investors. If you go back to, and it's all available in the SEBI site also because we are supposed to declare that number. In the month of April, the benchmark moved up by X percentage. Our portfolio moved up by almost 3x. In the month of May, the benchmark moved little bit only, but our portfolio did extremely well. So by moving out of mid and small cap, it did impact our returns? The answer is no. In other words, if you ask me, it worked out brilliantly for us. First thing, it reduces the anxiety for the investors, for us, by taking exposure to mid and small cap. And number two, we did not compromise on the returns. And if you want, I can present the data in terms of how we have done well in FY 2025, that is financial year, because March we exited, so April, May, and this one, how well we have performed. I must tell you, we have outperformed the benchmark. You would be surprised to know that some of the PMS funds in the month of May have given negative returns in the month of May. And we gave positive returns in the month of May, despite not having an exposure to mid and small cap. Vikram Singh is saying, what are the ideal return expectations for equity market? 14 to 15% CAGR. When I say CAGR, don't expect every year you will make 14-15% return. There will be year you will not make any returns. In fact, you will make negative returns. And there will be some year where you will make positive returns. But you should expect 14 to 15% return CAGR. So if I have to say in a block of 5 years, you should make 14 to 15. Then in other words, you should double your money every 5 years. That's how we should look at it. Dawood Sayed is saying, can you please elaborate what is exactly PMS? So PMS stands for Portfolio Management Service. So what we do in the PMS, sir, you give us the money of minimum 50 lakhs to us. We buy and sell stocks for you. You don't have to do anything. And we share that details, what we bought and what we sold once a month. And then you can also see what we are holding in PMS through NSDL, because NSDL will also send you data with you, because we are holding in your name only in your demand account, which is controlled by us, not by you. And PMS is a SEBI registered product, so anyone cannot launch PMS service. Only people, those who have got license to run PMS can only launch, and this license is issued by the SEBI to us. So we have a license from SEBI and we do that. So that's a PMS. And if you need more information, I'll ask my team to reach out to you. Just message me this email of this gentleman, Dawood sir. I'll ask someone to reach out to you and we'll explain you that in detail. Last two questions, I think, in the interest of time. Sir, my Mojo portfolio is nearing 50 lakhs. If I have to subscribe for PMS, do I have to sell all stocks which I hold currently, or I am able to subscribe with current portfolio values also? Pallavaji, you can do either way. You can transfer the shares to us, and based on our IP, we'll take a call. Or you can sell those shares and give us the money. The best option is that you sell your shares and give it the money to us. Then you know that you've given us 50 lakhs and what happened to that 50 lakhs after 3 years, 5 years, so on and so on. So you have a clarity of thoughts in that. But you can come both the way. You can give your current portfolio also, or you can sell your shares and give us the money. Both ways, it's fine with us. Krishna Raj Ved is strong buy, best to buy? Answer is yes, 100% yes. I know you may have more questions. Unfortunately, I also came in front of you after almost a week or so, more than a week. But in the interest of the time, I think we need to conclude this webinar. Again, I'll be there in front of you again next Tuesday. We'll do QnA with Sunil Damania, and the question that I could not answer this time, please ask again, and I'll be more than happy to answer. With this, have a great weekend. Take care. Please be careful of what you are getting into in terms of stock selection, sector allocation. And remember, market looks a little frothy, especially mid and small cap. There are some pockets where bubbles have been formed, and be careful that you don't get into a wrong company at the wrong time. With this, good night, take care.